Hello and welcome to this video. In this video, I'm going to talk about Tesla, Apple, Amazon, Microsoft, Nvda, Netflix, Google, and Meta. So I'll start off with Tesla. Tesla reports earnings next Wednesday. Um, next Wednesday. So obviously, ahead of this earnings, the stock has been lackluster for the last 1 month or so. Now, this is consistent with what's happening in the sector. Tesla is in consumer discretionary sector, XLY. So if we look at XLY quickly, you can see that it's been kind of going sideways. The idea here is that there's concern of a recession sometimes this year. And if there is a recession, consumers are likely to cut back on discretionary items. And that's why this sector has not been performing as well as, let's say, the technology or the communication or healthcare. It's been going sideways because of the recessionary concern. And Tesla being part of this sector has not been immune to this. So you can clearly see, it's going in kind of sideways. If you look at the structure right now, you can see that, it was beginning to look better. You can see series of lower highs. But then after the delivery report came out and concern about the inflation, so this uptrend has changed. So what we now have is a high and a lower high. And also, if you look at after forming this low, it has now formed a lower low. So the Tesla has some work to do if it wants to change this structure. If you also look at the moving averages, where the moving average is, you can see right now it has fallen below the daily 20, which is the green line, and the daily 50. I mean, it remained below the 200-day. It's been underneath 200-day for a long time, but it was trading above the daily 20 and 50 EMA even at this point, but it has since fallen below this. So definitely it's looking, the structure price action is definitely weak. If we look at the momentum indicators, you can see that RSI is below the 50, so that's an indication of weak momentum. And MACD, it looks like it's moving below the zero line. You can see that this is the zero line. So, it's moving below the zero line. So even the momentum indicators are looking weak. Stochastic has now come back to the oversold territory. So definitely there's nothing positive about the price action and the momentum indicators, but next week's earnings can change all of that. If we look at the weekly chart, on a weekly basis, you can see the structure is one of series of lower highs. Lower high. Could this be a lower high? It's possible. On the other hand, after forming this low, could this be a weekly higher low? It's very much possible. So at the moment, on a weekly basis, it's stuck in this range. It's been trading inside this range. So we need to see how Tesla resolved this range. Does it break to the upside or does it break to the downside? So we don't know that. Maybe after the earnings, we'll get some clarity as to how Tesla resolves this consolidation pattern. If you look at the momentum indicators, RSI is kind of in a neutral area. It's just below the 50 level, so this is not positive. MACD, you can see that hasn't closed above the zero line on a weekly basis. So momentum indicators are not positive at the moment. Neither is the price action. So looks like Tesla has some work to do, and we'll have to wait and see how the market reacts to the earnings report next week. Moving on to Apple. So this is Apple. Apple is looking much stronger than Tesla. You can see that it's moving higher. It's been making a series of higher highs. So you can see that after this high, this low, lower high, and lower high. higher lows, I'm sorry. Higher lows, and then you have high, and then higher high, and then higher high. The question is now, is this going to be able to take out this level and establish a higher high? So that's to be seen, because it did find support at the so let me just zoom it out. It did find support at the daily 20 EMA recently and bounced, and the question is whether it's going to be able to establish a higher high, because you can see that it has done so in the past, or whether we're going to see a lower high being formed here. The other thing I wanted to mention is that although the two moving averages, the daily 20 and the 50, are moving higher, the gap between them are beginning to widen. Whenever the gap widens, you generally see some kind of a consolidation or adjustment, and this gap then narrows. You can see right here, while it was moving higher, gap was widening, and then we had this correction. Even on the downside, when Apple was moving lower, you can see the gap between the two moving averages were widening on the downside, and then we had this adjustment, and that narrowed the gap. Even if we look to the left, right here is another instance where the price was going up, the moving averages were going up, and then it started to widen, and then what we saw was a decline which adjusted the gap. So I'm not suggesting that we're going to see a big decline, but I think there is an opportunity maybe for some consolidation. If I see that Apple is not able to take out this one, then it is entirely possible that we may have to go back and revisit this one. So the levels to watch for Apple is the following. So let me get rid of on the upside, obviously this level right here, which is 167 on the upside, and on the downside, the first level to watch is this level around 162. 162, and then the recent low, which is around 160, and finally this level 157. I think the 157 is where you can see the 50-day moving average is coming up to this 157. The 20-day EMA is coming up to this level. So watch this level right here, which is basically where the 20-day moving average will be coming fairly soon. So this number is around 162. So the resistance is 167, support is around 162, followed by the moving the 20 EMA and then the 50 EMA. I want to see whether after forming these series of higher highs, whether Apple forms a lower high. So that's to be watched. If we look at the weekly chart quickly for Apple, so you can clearly see that on a weekly basis it's been moving higher. We have this downtrend. So if I just zoom out, you can see that on a weekly basis it formed this higher lows. So we need to see whether or not Apple is able to break this sequence of higher lows. So that's that would be the next thing to watch out. If so, then we can expect maybe Apple to gradually move higher, but this would be the downtrend that I'm watching to see whether it can overcome. So that's Apple. Moving on to Microsoft next. So again, Microsoft has a very strong looking chart. You can see that since forming this low around 247, it's made a very strong move to the upside. Again, this is primarily due to its exposure to AI. But it's reaching a point where you can see that the daily 20 and 50 moving averages are beginning to widen, the gap between the two widen. I just talked about that in case of Apple. The same is happening in Microsoft. And again, whenever you see gaps widen, generally something happens, an adjustment happens, and the gaps narrow. We've seen it right here. We've seen it on the downside right here. You can see right here when the gaps widen, there was a correction. Even if we move to the left right here, you can see during the decline right here. The gaps widen and then there was an adjustment. So I would expect some kind of an adjustment to take place so that this gap narrows. Now, in terms of levels, let's look at some of the levels that we should be paying attention to. So Microsoft has been trading between these two levels. This is 292 and this is 282. So because it's been consolidating, if this 82 is breached, then a measured move would project a target to this level, to 272. So I want to see whether or not how it resolves breaking out of this consolidation. Does that break to the downside or break to the upside? Now it moves in a range of $10. So if this level is breached, then the next target would be 302. So that would be 10 points to the upside, because this is a 10-point range. If it breaks to the downside, you're looking at a 10-point move to the downside to around 272. But if it breaks to the upside, then it would be 10 points to the upside, so that would be 302. But again, you can see that it had a big run up. What I'm watching is the gap between these two moving averages are going up. I mean, technically this is looking, it's a strong looking chart. You can see that the momentum indicators are positive. Their RSI is above 50. MACD remains above the zero line. But I'm wondering whether it can consolidate further and resolve this. If we look at the weekly chart of Microsoft, weekly chart also is looking quite strong. You can see a series of higher lows, but it's now coming up to a known area of resistance right here, and then you can see some rejections right here. So 292 is looks like there's going to be some resistance that it needs to deal with if you look at it from a slightly bigger time frame. So I'm wondering whether there's some kind of a pullback likely to happen. I mean, this is entirely possible. I don't think pullback is necessarily a bad thing. I think this would be quite healthy. It can pull back without breaking this structure. So that's Microsoft. If we look at Nvda, so Nvda is also somewhat similar, because you can see that Nvda had a strong run up, but it's beginning to consolidate recently. You can see that over the last couple of weeks, it's been consolidating between this range. It's now also at the 20-day moving average. Again, the gap between the two is quite wide. I'm wondering whether it can consolidate and narrow this gap. So if this level is breached, so let's look at the levels and see what are some of the levels we should be paying attention to. So let's bring the levels and let's just zoom out. So you can clearly see that this area has been a support, number of touches at this level. So this level, this is, what level is that? This is around 264. If this level is breached, the next level I would focus on is around 257 on the downside. And finally, this level, which is around 250. If I bring in the moving averages, you can see that the 50 EMA is moving towards the 50 level. It still is below the 50 level. I'm not saying that it's going to fall to this level, but I'm saying that because the gap is wide, I'm seeing some slowdown in momentum. You can see that since forming this high, there is a lower high, and if this level is breached, then we're going to have a lower low. So I see some pullback. Even if there is a rebound, the question is whether it can take out this level. If it takes out this level, that's good. But on the other hand, there is a possibility that it might make a lower high. So that's something to keep an eye on. I mean, even if it pulls back, it still has this uptrend intact. So this pullback would be in the context of this uptrend. So don't get me wrong, I'm not expecting a rug pull. I'm expecting maybe some kind of a pullback so that the moving averages kind of flatten out a little bit, because anytime the moving averages widen, generally there is an adjustment and you see some the gaps narrow. So on the upside, the resistance would be 278 and 264 is the support. If 264 is breached, then I would look for 257 and then 250. If we look at on a weekly chart, you can see that it's got a very strong looking weekly chart, no question about it. But it hasn't had a weekly consolidation. Like from here to here, it had a decent consolidation. But after this, it hasn't had a weekly consolidation. I mean, for the first time, we're seeing some modest pullback. Can it afford a little bit more and establish a weekly higher low? I think so. Even if it, let's say, pulls back to something like this, you still have a weekly higher low. So I don't see that to be a problem at all. If you look at the RSI, weekly RSI, it reached an overbought level. At its high, RSI was around 78. So that says that it is kind of overbought and maybe due for some pullback, because you can see that there is some weekly resistance from March of 2021. So that's Nvda. That's Nvda. So I mean, overall strong looking chart, but beginning to see some slowdown. You can see that MACD is gradually moving lower. Maybe it can come down towards the zero line and then move higher. So that's Nvda. If we look at Amazon is basically in consumer discretionary sector. So Amazon also has been trading sideways. Because as I said, there is a concern that if we have a recession, then consumers are likely to cut back on discretionary item, and Amazon is one of the heaviest weighted stock in discretionary, and that's why you can see that it's been kind of going sideways. It doesn't have as strong a chart pattern, say, as Apple or Microsoft or even Nvidia. That's because of this cloud that's hanging over its head, that if we have a recession, Amazon could get affected. You can see that it hasn't been able to take out the daily 200-day moving average, and it's been kind of hovering around the daily 20 and 50 moving average, which are kind of going sideways. You don't see a strong move to the upside, but momentum indicators are positive. MACD is above the zero line, RSI is above 50. So Amazon's momentum indicators definitely are better than that of Tesla, even though they're in the same sector. So in terms of levels, what are some of the levels we should be looking out for? So the previous high is this level, which is around 104. So that would be the near-term resistance. So we need to see whether or not it can take out that. If it's able to take out that, then obviously you'd have to think that it's going to challenge the 200-day moving average, which is around 107. On the other hand, the moving averages, the daily 20 and 50 would act as support. You can see that it touched the daily 50 and bounced. So the daily 50 is around 98 and a half. So those would be the level, and then below there it's 95. So I'm looking at 97, which is the 50-day, and 95 on the downside, and on the upside I want to see whether it can take out the previous swing high, which is around 104, and then I would expect a move to but for the most part it's basically going sideways. As I said, this sector is not bulling like the other sectors, especially on the technology side. Let's look at Google. So this one I happen to like a lot. The chart pattern looks quite strong to me. So if I zoom out, you can see that since forming a bottom right here, you can see series of higher lows, and you have higher highs. We have another high. You can see that the daily 20 and 50 are moving higher. It has taken out the 200-day moving average. So there's a lot to like about this short pattern. Even if we look at the momentum indicators, you can see MACD, RSI both positive. If we look at the weekly chart of Google, so here is Google. So you can see that it's been gradually moving higher. Now, what has happened this week is that it's closed above this two rejection level. So previously, what's this level? 109, let's say. So previously 109 has been a rejection level on a weekly basis, but it managed to close just above that this week, 109.46. I mean, that has to be positive. You can see that momentum indicators are positive. RSI is above 50, MACD is crossing above the zero line. So there's a lot to like about the chart pattern of Google. Both on a daily basis and weekly basis, it's looking positive. So what are some of the levels we should be paying attention to on Google? So these are the levels. Let's just zoom it out so you can see. So the previous high was 109.63. So if 109.63 gets taken out, then I would target around 115. 115. So that would be my next target. On the downside, the support is where this low of this red candle is that one, which is 105. If I bring in the moving averages, you can see that the 20 EMA is coming towards this level, 105. The 20 EMA is at the moment at 104.28. So, in the next few days, it's going to be coming towards this level, 105. So if it pulls back and touches this 20 EMA, I don't think that's necessarily a bad thing, because you can see that ever since this run started, it pulled back and touched the daily 20 and bounced. So can it come back and touch the daily 20? Sure. So those would be the levels I would be watching. 109. Let's see. The previous exact high was 109.63. If it takes out that level, I would expect it to gradually move towards the 115 level, and the support would be to the 20-day moving average, which is around 104 but moving higher, so 104, 105 level. But overall, Google is looking strong at the moment. Again, earnings will come out, things may change at that time, but leaving that aside, at the moment, it is looking more positive than negative to me. Let's look at Meta. So what does Meta look like? I mean, this thing is just basically going straight up. Every single day it's been going up. It's got a very strong looking chart. Moving averages are going up, daily 20 and 50. The gap is fairly wide. It hasn't touched the daily 20 in a while. You can see ever since this rally started, it bounced off the daily 20, it touched the daily 20 right here. It hasn't done so for a while. So can it come and I think that would be healthy if it did so, because it's been basically going higher. But there's nothing to suggest that this trend is about to change. This is a very strong looking chart. Momentum indicators are positive on a daily basis. If we look at the weekly chart of Meta, just to see what can we see. So this is the weekly chart of Meta. You can see that since trading inside in this range, it has broken out, and now the full measured move of this distance projects a target to this level, which is around 224. So 224, that means we're not too far from that level. You can also see that there's some resistance at this level. So I would watch this level, the 224, 225 level on Meta, because there is some resistance right here. Also, it's the full measured move of the previous consolidation. Also on a weekly basis, you can see RSI is above 70. You see this line. Whenever it comes to this line, it doesn't like it. So I would watch out, because it is overbought. But the momentum indicators are quite strong. There's no question about it. The only thing is that it hasn't consolidated. It hasn't pull back, for a while. So I'm wondering whether, there is some pullback coming. What are some of the levels? I mean, I would definitely look for support at this 20 EMA. Where is that? 20 EMA is around 208. Where is the stock right now? It's at 221.50. So, there is another, there's, $11, $12 on the downside risk, at least to the 20 EMA. So that would be the level I would be looking for on any pullback, at least, when it pulls back the first time, because, it found support, twice previously. So that would be the level I would be looking for support, which is around 208. And lastly, let's look at Netflix. So where is Netflix? There it is. So Netflix, what do we see in Netflix? So let's just remove the moving averages and look at the price structure for a second. You can see that, if we look at here, you can see series of higher lows and higher highs. But after forming this high, it hasn't been able to establish a higher high. It actually formed a lower high at this point. So that is, something to keep an eye on. That it hasn't, since this correction, it hasn't been able to take out this high. If we look at the moving averages, where the price is in relation to the moving averages, you can see that it's trading above the moving averages. Recently, it came and touched the daily 20 EMA and bounced off this level. So at the moment, the price remains above the daily 20 and 50, which is positive, as well as above the daily 200-day moving average. Now, that said, Netflix is going to report earnings next Tuesday. Now, ahead of the earnings, I think we need to be a little bit careful, because it tends to be very volatile after the earnings. Because you can see last time after it reported earnings, it just moved higher. You can see even before that, after the earnings, it rose quite sharply. But before that, and then here too, after the earnings, it had a positive reaction. So 3 positive reactions in a row. But before that, you can see big drop here and then another big drop right here. So those two, so it tends to be very volatile after the earnings. Big drop here, but then 3 in a row, positive reaction. Once here, once here, once here. What's the reaction going to be like here? Is that going to be fourth positive reaction, or are we going to see something like what we saw, in 2022? So I would not be, I would stay on the sideline, because if it rallies, it tends to rally big. If it drops, it tends to drop big. So I would stay on the sideline, at least ahead of the earnings. Let the earnings come out. Let's see what the reaction is, and then maybe consider buying it. But at the moment, I'm waiting to see whether or not it can take out this previous high. So that would be the level I'm watching. So near-term resistance would be this high, first of all, which is around 350, and eventually I'd like to see this level taken out, 372. And on the downside, obviously support is around 332. These moving averages, which are around 332 and 327. So those would be the support levels. And finally, this previous low, which is around 286. But I would wait, stay on the sideline ahead of earnings, because it tends to be very volatile after the earnings. So that's Netflix. So those are the charts I wanted to look at. Thank you very much for watching the video. You can also follow me on Twitter for updates during market hours. I do provide, if I see any trading opportunities, I do provide an update through my Twitter account. So you can follow me through Twitter as well. Well, thank you very much for watching the video. Please consider subscribing if you haven't done so already, and I hope to see you again in a future video. Thank you very much.